very good morning and welcome to Power Breakfast. And in the Mumbai News Center, I am Sonal Bhutra and with me is Mangalam Malu. Hi Mangalam, good morning.
Good morning. It's a Thursday, a lot of cues to work with. Overnight, there was good news coming in from the Fed saying that they'll be patient with rate hikes. And then we have the F&O expiry. The SGX Nifty indicates a strong start. So what we do is, first up, go to all the top stories and then we crack in on individual stories, a lot of them to track this Thursday morning. Wall Street rallies in overnight session. The Dow reclaims the 25,000 mark. The Federal Reserve holds rates steady and signals patience with rate hikes.
The Justice Sri Krishna panel finds Chanda Kochar in violation of ICICI Bank's Code of Conduct. ICICI Bank sacks Kochar, who has to return bonuses paid to her from April 2019 until March 2018.
On the other hand, ICICI Bank reports a strong set of numbers for the third quarter. Asset quality improves while slippages come in at a 14-quarter low.
And the big numbers in focus today. Telecom major Bharti Airtel expected to report a big loss of 930 crores for the first time. Two-wheeler maker Hero MotoCorp is also expected to report tepid earnings with low single-digit revenue growth due to weakness in demand.
In other numbers to track today, liquidity crisis expected to have an impact on disbursements and loan growth for Indiabulls Housing. Also watch out for numbers coming in from Vedanta, UPL and Power Grid. All right, before we kickstart trade, a first look at the Asian markets, and they're giving two thumbs up to what took place overnight from the Fed. Remember, the Fed chair used the word patience 7 times in his speech, indicating that they will be patient with future rate hikes. Not just that, in fact, they also removed the word gradual rate increases from the speech. And the Asian market's doing fairly well. The Nikkei is sitting with a gain of about 0.75%. And remember, this comes despite the strengthening in the dollar yen. Yesterday, the dollar yen was close to around 109.6 and now it's strengthened below the 108 handle. And this is on account of the commentary coming in from the US Fed, which also took the dollar index lower to around that 95.4. If you take a look at the other indices, the Korean markets absolutely flat as we speak, now dipped into the red by about 2 points. The Straits as well as the Taiwanese indices should come up for you as well, both of them trading in the green as we speak. The Straits outperforming the Taiwanese index. The SGX Nifty, that one should come up for you, indicating a start upwards of 50 points in the green. That'll be very important for our markets to whether hold on or not, because today is the expiry of the January futures and options contracts. And for this series itself, we've lost about 128 points. Will the Bulls make a comeback on the last day and perhaps end the series flat or not? Well, in cricketing parlance, it's the 5th day of a test match. Let's see where it turns.
All right, then let's talk about the US markets then, where actually the action happened. US stocks rallied to close higher, with the Dow Jones reclaiming the 25,000 level for the first time in over a month, boosted by solid corporate results and an accommodative Federal Reserve. The S&P 500 advanced 1.5%, while Nasdaq outperformed to end with gains of over 2%. The Federal Reserve kept interest rates unchanged and said it will be patient with raising rates moving forward. On the data front, US private payrolls grew by 213,000 in January, according to data released by ADP and Moody's Analytics. This comes ahead of the non-farm payrolls report due later tonight. CNBC's Courtney Regan gets us a wrap of all the action on Wall Street.
U.S. markets getting a big boost thanks to the Fed. The Dow jumping 434 points, the S&P 500 adding 41, and the Nasdaq tacking on 154 points. Investors cheering the news from the Federal Reserve after it announced it will keep rates on hold at its latest policy meeting. The central bank voted unanimously to keep rates in a range between 2.25% and 2.5%. Chairman Jay Powell saying the Fed will be patient with any future moves, adding that the case for rising rates has weakened. Meanwhile, it was a big afternoon for corporate earnings. Facebook, Qualcomm, and Visa all getting a boost in extended trading thanks to strong earnings reports after the bell. The news not as good for Microsoft and PayPal, though. Shares of both those companies falling on revenue misses. And pending home sales were down 2.2% in the month of December, despite falling interest rates on 30-year mortgages. Realtors blaming the slowdown on volatility in the stock market and rising home prices. That's the action from the U.S. market. Now back to you in Mumbai.
All right, the action in the U.S. markets was on account of what took place in the Fed meet. So the FOMC left its benchmark rates unchanged as expected and said it would take a patient approach towards further rate hikes. Fed Chair Jerome Powell says the case for raising interest rates has weakened. CNBC's Steve Leisman reports on the details.
The Federal Reserve, in a sweeping policy change from its December rate hike, gave the doves almost everything they were looking for at the conclusion of their January meeting. The Fed, in its policy statement, kept rates unchanged, said it would be, quote, patient in considering further hikes, and removed from its statement language that telegraphed further rate increases ahead. The Fed even said its plans to reduce its $4 trillion balance sheet, described just last month as on autopilot, were up for consideration now if the economy weakens.
Growth has slowed in some major foreign economies, particularly China and Europe. There is elevated uncertainty around several unresolved government policy issues, including Brexit, ongoing trade negotiations, and the effects from the partial government shutdown in the United States. Financial conditions tightened considerably late in 2018 and remain less supportive of growth than they were earlier in 2018. And while most of the incoming domestic economic data have been solid, some surveys of business and consumer sentiment have moved lower, giving reason for caution.
Analysts took the new policy pronouncements to mean the Fed is now on hold for at least 6 months, pending more clarity in the economic outlook. Economist Joe Brasuelis at RSM called it, quote, a strategic retreat for the Fed. Ian Shepperson at Pantheon said it was, quote, about as dovish a statement as possible, unless it was a rate cut, which it wasn't. Powell said the Fed could take its time in figuring out its next move because inflation is muted and lower oil prices should keep it that way. What's unclear is, if the fears of weaker growth that grip markets prove transitory, will the Fed double back again to talk about further rate hikes later this year? Or is the Fed paused for a more permanent patience now?
All right, then on that note, let's get in some market opinion from experts on what they make of Fed's rate decision.
Chairman Powell said patience 8 times. So rates are going to be on hold. And in addition, they heard flexibility on the balance sheet. So they've heard everything. You know, I would just note, not all fears have disappeared. Policy fears have disappeared. I think people are still worried about what's happening in China and what's happening in Europe.
If you look at the assets and liabilities, the thing is the assets of the Federal Reserve have come down about $500 billion on track. But if you look at the excess reserves of the banking system, from their peak they were 2.7 trillion. They're now down to 1.5 trillion. And this has got to do lots of different things. One of them is people are actually carrying more dollar bills and $100 bills around the world. That's part of their liabilities. One is the Treasury Department has got a bigger checking account at the Federal Reserve, and that's squeezing excess reserves too. So when they say reserves may not be sufficient, what people don't realize is the reserves are falling much faster than their assets. That's a very technical point. I do think this is a feature of the Powell Fed, is he is a very, he's flexible. He's not flexible in principle, but he is flexible in policy.
All right, and across the Atlantic in the European markets, they ended mostly higher. The FTSE gaining about 1.6%. The French index also high by about 1%. The German index was the one which was lower, led lower by just one stock, Wirecard AG, which was down about 13%. But other than that, all these stocks all these indices ended higher ahead of the Fed's policy decision. In fact, the investors also awaited outcome coming in from the US-China trade talks. So that was an important data point. One stock that stood tall in the European region yesterday was the luxury goods maker LVMH. Louis Vuitton Moet Hennessy was up around 7% after reporting strong numbers. So that is what took place in the European markets. Will be very interesting to see how they react in today's trading session, because yesterday they closed ahead of the Fed's decision and in the green.
All right, let's talk about the currency space then. The dollar gives up gains after the Federal Reserve held interest rates steady, maintained a caution on its outlook for the economy and future interest rate increase.
In the world of commodities, crude oil prices rose, boosted by concerns about supply disruptions after the US sanctioned Venezuela's oil industry. Prices are also supported by lesser than expected rise in US crude inventories.
Let's take a quick break. Up next, all the cues and news you need to know for trade this morning.